Go. Hello, welcome to Wealth FX, and I remain your host, Mr. Babs. And today I want to teach us a very significant concept in Forex trading that can, change the game for you. And this is what I call the CEST approach, and it basically stands for conditions, entry, stops, and targets. Now, what do we mean when we say conditions, entry, stops, and targets? Now, it means that for every chart we come up to, what are the conditions on the chart? What can you see on the chart? What is the chart doing? You want to pay attention to, is it price action, is it technical analysis, is it candlesticks, is it chart pattern, is it liquidity, is it supply and demand. All of these are part of the conditions you want to look out for when trading the financial market. And now the beautiful thing about this approach, CEST, is it works across any chart or financial commodity regardless of what you're trading, be it crypto, be it stocks. It works. So yeah, in this video I'm gonna actually show you how I basically would analyze this chart. This is gold, and we took a position on gold last week. This was last week's trade, and yeah, gold did about 1200 300 pips plus thereabout. So it was the same approach I used. Now, what are entry? Entry is based on the conditions you've checked out on your chart, you've identified. Where would you be looking to take your entry from? Where would your potential entry be? Now, after determining your entry, you want to pay attention to, all right, my stop loss. Where would my stop loss be? If I am taking an entry, be it instant execution or pending market order, where would my stop loss be? And for someone like me, who I am a swing trader, and that is what I basically teach my students, most of the time we start our analysis from the higher time frame. So when we have areas of entry, most likely our stops goes around the structure, below the structure, or above the structure if it's a buy or a sell. Now, just like you have here, this trade, this was our target, and this was where our stop loss is. I'm going to zoom out on this chart a bit shortly. And now, when you have determined your conditions, you've determined your entry, you've determined your stops. Now, where are you targeting? For this trade, this was our target. This gave us about 6.8 reward, and yeah, we did about 1300 pips plus. Yeah, and I was risking barely 0.5% because the entry was quite snipered. And yeah, so how do I use the conditions, entry, stops, and target? Now, this is the daily time frame. I like to start my analysis from maybe weekly time frame if it's the beginning of the week, or daily time frame. Now, most times, like you can see, this is your weekly resistance zone. Or if you zoom out on this rejection here, you have this area as your supply zone. So I could literally add this supply zone. I think I have to change the color. Yeah, my supply zone. Okay, and this would have been my demand zone. So let me clone that, and yeah. Now, like I always say, when I come to the chart, what are the conditions? Now, this is condition number one. I am identifying my zone on the higher time frame. Now, this gives me a bigger picture of the areas I am expecting price to react from or to, depending on what I'm looking out for. Now, if you pay attention to this move, we have a 1 2 3 candlestick with this huge bullish engulfing candle, which happens to be a retest of liquidity. It happens to be a retest of liquidity in the previous month. This was a break and retest pattern, and then this engulfing candle literally led to this huge move. This was about about 3,000 plus pips, and then after at this high, we had a huge rejection all the way to this point, and price sold back into the last structure which it reacted from again. Now pulling back to to below after liquidating the supply zone here, it came back to the demand zone. Now, of course, when there's a break of a significant structure like this is where we see resistance turning into support, and this is some people call it breaker block. And if you can, as you can see on the larger picture, since this is the daily time frame, there is an imbalance here. This zone has not been liquidated, so sometime in the future we'll be expecting price to come to liquidate this area. Now I have the higher low, and then higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then this almost break of structure. But now if you pay attention, this would have been a new lower low and a break of structure. But here's what happened. Price literally had to come and fill in this imbalance here, and this happened to also be a demand zone. So immediately price nicked the demand zone. There was a rejection, and then we had a break of structure here, a pullback to retest the new demand that was created in this area, and now we have a break, a pullback, higher low, and then a new higher high. Now this higher high can also be equivalent to this last supply zone. So notice how most of the orders are being accumulated in the swing zones at the swing high and the swing low. So even if you are looking to trade, to buy or sell, I always pay attention to my entry being around zones. It might not give you opportunity for too many trades, but when it comes around, it gives you a high reward opportunity setup. So yeah, trying to master this has helped me improve my trading performance. So we have our supply zone, which is also our optimum trading zone, and now immediately price liquidated the last supply here. We had a sell all the way down to this previous low, all the way into this small imbalance here. There's an imbalance here, and now that imbalance was filled, and we had a rejection with this huge harami candle, almost no wick to the upside, a little wick to the downside after this small doji candle here. This also happened to be a morning star in an uptrend with higher lows, tells me that the trend is still quite bullish. Now after the break of this structure, there was a pullback to retest this new fair value gap and open price area, which happened to close with an engulfing candle, and ever since we had a pullback forming a higher low and we continued rallying. But I did not take my entry on the daily time frame. I took my entry on I think 1 hour. But now before then, I always like to correlate my time frame structure from higher time frame to lower time frame. So now that area we're looking at on the daily time frame that gave us the bullish harami engulfing candle was this. So we had this change in character and break above, and price tried to rally until it got to this supply area here, and immediately it came back to retest the fair value gap around this 3,316,317 area. Now, at that point, we had another rejection of price, breaking structure here. Price pulled back to retest the new demand supply, demand area, and we had an engulfing candle, and ever since been in a high. So the moment I saw price break this structure and pull back into this area. I was expecting a pullback into this area because I knew, okay, all things being equal, if as long as we stay below, stay above this last low structure, if I'm conservative, if I'm aggressive, if I'm conservative, I could do this. because I know, okay, all things being equal, we're not closing below the structure, but I had a stronger feeling because of the momentum that I could see. I knew that strength was increasing for the buyers in this trade, so I just put my stop loss around the previous low, and yeah, we ran about 1,300 pips, and yeah, this gave us about 6 to 7% profit return. So yeah, that's for XAU USD, and you see how I've been able to combine different concepts together. Now my conditions determined my entry determined my stop, and my stop determined my target. So this is an approach that you can literally use to analyze any chart. You could even have a journal, rule them into four parts: your conditions, your entry, your stops, your target. So what conditions can I see on the chart? What conditions am I paying attention to? Now, if you look at gold, just like we have said, after this swing uptrend, we are currently at a possible previous resistance zone. Now, we want to pay attention to what pattern or what structure price forms here, because it could mean two things: the continuation of the uptrend, price literally pulls back to this area and then continues shooting for the moon, or it could be a change of character, break of structure, maybe lower high, and then we'll be looking to sell all the way back down into these lows. So yeah, when price is at zones like this, you want to pay attention to how they are reacting and what kind of formation structures, price action principles and characteristics can you see on your chart. All right, using this same approach, I'm going to analyze another pair, which is BTC. Yeah, and now let's go to the daily time frame. Yeah, we had BTC, a sell on BTC, and yeah, this was BTC USD. This was last week as well. Okay, if you pay attention, you can see we've been on in an uptrend: higher high, higher low, higher high, higher low, higher highs, higher low, higher highs, higher low, higher high, equal low, higher high, and then equal low, change of character, bullish momentum candle, engulfing, break of structure, retest, break higher high, higher low, higher high, which happened to be a new ATH, that's all-time high. Now after this, we had a bit of a range and then some pullback into that same exact area, forming what we call a double top. So this would have been a double top chart pattern, and yeah, some double top. And yeah, how do you identify your double top pattern? You have, two tops where candle does the first top here, pulls back, gets there, and then seeing that double top on the lower time frame, I already expected a reaction. Now, this was what yeah. So on the lower time frame, the double top happened and there was a whole lot of exhaustion because now price was struggling to keep going higher, and I could see rejection of higher prices, red candles following each other sequentially. This is the first top, this is second top. So yeah, we took an entry and we did about 148 points, and yeah, that's about 1 ratio 12 risk to reward. And yeah, we're still looking at what it's doing currently, because this could be the retest of recent demand, and price could decide to respect this, break structure, and start going back higher. Or we could continue to see high, lower high, higher, lower highs, lower low, lower highs, lower low, lower highs, lower low. So, but as long as we have a new break of this structure here, then we would no longer be in a lower high anymore. We would be in a higher high. So this is the area we're watching out for. and as long as price does not break this structure, we should still be in a downtrend. But the moment we break this structure, we should be looking for a pullback and then buy to the upside. So yeah, as for BTC USD, and BTC USD was quite smooth because it literally just did its way all down. And okay, another pair that I think I want to analyze before I call it a day. Yeah, GPP JPY. I think we're currently on a position on that, and yeah, we're currently on a position on that. So looking at my trade on GU, now I always want to start my analysis from the higher time frame, daily. And yeah, what can I say on the daily time frame? Okay, so on the daily time frame, what can I see? Yeah, we have retest of demand here. And ever since we've had higher highs and higher lows, higher highs and higher lows, higher highs, break of structure, higher low, and then price kept on making higher highs and higher lows. And now you can see that all of this liquidity, the moment price got here, it's rejected it with a bullish engulfing candle, and then we broke structure and we've been making higher lows ever since. Now, at this point, which happens to be what I call confluence, I call this confluence. Confluence is when you have multiple confirmations on your trade. Yeah. Now, for this confluence, for instance, I have, as you can see, yeah, I have a retest of this trend line. I also have a retest of this zone, which happened to be the new break of structure, a pullback, and then price immediately got there. We had this surge breaking this structure, this high. Now pull back for a bit, and we have an engulfing candle already. So yeah, I went to the lower time frame, which was my 4 hours. Now I go from my 4 hours to 1 hour, depending on what I want to see on my charts. So yeah, and currently we did a break of structure, and we should be looking to ride this into the new highs. Yeah, this trade is targeted for about 1 ratio 11. We're risking about I think we're risking about 0.3%. So let's say we're risking about 76 pips and targeting 800 plus pips. Yeah. So that's it. And hopefully we run all the way through. So this is how I use my C.E.S.T approach to analyzing any pair. And I hope this video has added insights and value to your trading journey. And I look forward to seeing you in my subsequent videos. This is Wealth FX. Don't forget to like and subscribe. Turn on the notifications for more um, trading lessons and tutorials to help you sharpen your trading game. Yeah. So without wasting too much of our time, you can drop your questions or comments in the comment section below. I'll be looking forward to answering them, and also any topic you would love for me to teach or talk about, I'll also look forward to answering that. So I hope to see you in my next video lesson, and do have a wonderful rest of day.